Hello and thank you for joining us. My name is Rachel Barker and I am a charity account exec based in York for PIB Insurance Brokers. Some of you may know us by our previous trading name of D. Ford Insurance Brokers. What is the current position with the insurance market? Well, it's safe to say it's not how it was at the start of 2020. However, probably after about a decade of what we would call soft market conditions, we were starting to see a change in the environment in which we trade, and insurers were starting to show signs of increased volatility really across the market as we head into 2021. This was demonstrated by, first of all, reduced capacity, also fewer providers in the market, and diminishing appetite for certain types of risk. For the charity sector, this is probably felt in varying different ways, but it's probably mostly at the moment a problem for those operating in the residential or community care sector. I would say that the hardening the market conditions are not typically caused by just one event, and I'll come on to in a little bit what the events are that could have caused that this year. However, the obvious one is the coronavirus pandemic. That pandemic is probably now the most expensive event to ever hit the insurance industry, whether that be through travel claims, cancellation, credit and surety claims, potential FCA action, losses on investments, and for insurers now the issue is the unknown liability exposure moving forwards. It's been estimated that the Covid-19 pandemic will cost the insurance industry in the region of around $203 billion. So aside from coronavirus and the pandemic, what else is affecting the insurance marketplace and causing prices to increase? The first thing is Brexit. That has fallen into the shadows of the pandemic. However, it is still looking to go ahead, and this is still a major concern for insurers. The ability and appetite for some insurers to offer cover for international charities may be impacted definitely as a result of the Brexit negotiations. So all insurers are keeping a watching brief on that and the impact of that and what that may be. Secondly, low interest rates. Often the interest earned on investments can help to address underwriting losses with insurers. However, because of the current low interest rates and market volatility, those paired together have driven most insurers to a position where, in actual fact, for them to make an underwriting profit, what they're looking to do is drive rate strength. So prices are going up so they can recover their shortfall in profits. There's also climate change. So climate change is without a doubt having a massive impact on the world. The frequency of national disasters is becoming more common. That's therefore leading to significant payouts by the global insurance industry, so not just in the UK. In the early part of 2020, storms Kira and Dennis resulted in significant claim costs, approaching nearly 400 million. And since then, we've obviously seen floods and bushfires in Australia and America. So there are claims coming in from outside the UK that impacts the insurers overall. Okay, and then there's also Solvency II. So this was a piece of legislation introduced in 2016. And what it means is that by 2021, all insurers are required to hold certain levels of cash to ensure that they can meet their liabilities. So this has meant that the insurers have left markets or have deterred new entrants into a market who might drive cost competition. This has meant a reduction in supply and is likely to continue to place pressure on cost. So our advice and what you can do to help your charity. I think the first thing is to be thinking about giving your insurance policies the scrutiny that they deserve. It's true what people say, and the devil really is in the detail. So make sure that you're clear on the extent of cover that's provided by your existing policies, but also consider it alongside your risk register so you're aware of the risks that you as an organisation face and those that are catered for by means of an insurance solution and those that are not. Secondly, I think we need to look at investing in risk management. So this is looking at your risk management strategy and ensuring it deals with not only your general health and safety issues, but also some of the broader issues around compliance and governance issues, business continuity, quality assurance, and even training for your employees and volunteers. And finally, think about who your insurance provider is. You need to be seeking cover from a reputable provider, somebody who's got financial stability and is there to support you in the event of a claim. If you've got any questions, you'll find mine and some colleagues' contact details on our page, but please do feel free to get in touch. Any insurance related questions, queries, we're here for you and we'll do our best to help. Thank you very much.